Domino's Pizza stock is currently trading at $397 per share, but it's down 28% year to date. So if you're a value dividend investor like me, then now could potentially be a great time to looking into buying this company. So in this video, we're going to be going into my stock valuation spreadsheet in Google Sheets to perform a complete stock valuation on this company. And you can see on this spreadsheet, we have 4 different valuation models. We have Graham's valuation, we have a discounted cash flow model, a multiples valuation, and a dividend discount model, and all of these valuations will roll into our output tab. So let's go ahead and jump back over to our stock screener, and we're going to plug in Domino's Pizza's ticker right here and hit enter. And you can see all this data is going to automatically fill in. And the first thing you'll notice is this is a company that has performed extremely well in the long run. We're currently looking at a 2000-day chart. But let's go ahead and zoom in a little. So I'm going to put in 250. So now we're looking at a 250-day chart, and you can see just how large this stock price has dropped over the past few weeks. And so when we look at this dividend yield, it's only about 1% currently, but when we look at the dividend growth a little bit later in the video, you're going to see why dividend investors love this company. But let's go ahead and start with our valuations, and we'll start with Graham's valuation. And now, if you're familiar with Graham's valuation, you know that Benjamin Graham was one of Warren Buffett's mentors, and he created this formula in order to find the intrinsic value of companies. And so essentially what we're going to do with this formula is the first thing we need is the earnings per share, which for Domino's Pizza is 13.54. We're then going to multiply that by a growth multiplier, which is 7, which is the price to earnings of a company with no growth. And then we apply a growth rate, which for Domino's, I'm applying a 12.5 growth rate. We're then going to multiply that by 4.4, which is the average yield of AAA corporate bonds. Once we have this number, we're going to divide it by Y, which at the time of this video is the current yield of AAA corporate bonds, which is 3.21. After plugging everything into this formula, you can see we come to an intrinsic value of $361 per share. So let's go ahead and jump back over to our discounted cash flow model. And in order to perform a discounted cash flow analysis, we need to find a growth rate for the future free cash flows for this company. So in order to find this growth rate, what I did is I looked at the historical data for this company, and you can see they had an average growth rate over the past 5 years of 19.59, which is a really good growth rate. And so when I came to the growth rate of 13%, which is still a high growth rate, I also took into account industry standards. I also saw a recent article about Domino's. Really, what you'll notice is 80% of Domino's total global sales during 2022 were completely online, which is a pretty crazy thing to think about. So we can see they're really moving aggressively to online orders, which is going to allow them to grow at a pretty rapid rate over the next few years. So I used a growth rate of 13% and projected that forward over the next 10 years, and then calculated the terminal value, which is the sum of all the future free cash flows of this company past the year 2030. I then took the present value of these future free cash flows and added them all together to come to this number here. I then added the cash and cash equivalents and subtracted the total debt from this company, which allowed me to find the equity value of Domino's Pizza. After dividing by their shares outstanding, we can see I came to a discounted cash flow price per share of $470. So let's go ahead and jump forward towards our multiples valuation model. And here on our multiples valuation model, essentially what we're doing is we are using companies that are very similar to Domino's, and we're using a price to earnings multiple to value them, and then we apply that average price to earnings multiple to Domino's to find what its intrinsic value is according to the market currently. So you can see I took companies like McDonald's, Yum Brands, Starbucks, and QSR, and these are all similar companies to Domino's. And so what I did is I took their stock price and divided it by their earnings per share to calculate their price to earnings multiple. I then found the average price to earnings multiple of these companies and multiplied it by Domino's earnings per share. And when I've done this, we can see that the intrinsic value for Domino's is $314 per share. So let's go ahead and look at our dividend discount model. And the idea behind our dividend discount model is that we should be able to value a company based on how much they pay out in dividends and how fast their dividend grows. So we can see in order to do this, I plugged in the amount that Domino's has been paying out in dividends over the past few years quarterly, and then found the yearly dividend payout. After doing this, I could see exactly what their growth rate was each year for these dividends, and you can see they have been growing the amount they pay in dividends at an extremely high rate. It's nearly 19%, which is super great for all dividend growth investors. Now, growing their dividends at this rate is probably not sustainable, but I do expect them to continue to have a really high growth rate. So I projected an 8% dividend growth rate. Then after applying a discount rate of 9%, we can see that the dividend discount model gave us a valuation of $475 per share. Now, anytime we have a really high dividend growth rate, it's important to jump back over to our stock screener and look at exactly what their payout ratio is. We can see Domino's Pizza's payout ratio sitting at about 27.3%, so that is an extremely safe payout ratio, so we have nothing to worry about. They should be able to continue to grow their dividends for a very long time. So let's go ahead and jump to our output tab, and here we can see exactly what our valuations provided. Our grams valuation, $361 per share, multiples 314, discounted cash flow 470, dividend discount model 475. And now when we average all four of these valuation models together, you can see we come to an intrinsic value of $405 per share, which is very close to what this company is currently trading at $397 per share. Now, we always want to apply a margin of safety to help reduce any risk of errors in our calculations. So let's go ahead and apply a 20% margin of safety. And we can see based off of that, our acceptable buy price for Domino's is $324 per share. So our spreadsheet is telling us this is not a stock that we should be currently buying. Now, if you're an investor who is extremely focused on dividend growth, this could be a stock that you might still consider buying because it's going to be hard to find a stock that has better dividend growth than Domino's. Now, me personally, I do typically like to buy stocks that are within my margin of safety, but I actually have bought a couple of shares of Domino's in the past week, which you'll be able to see in my monthly dividend portfolio update. So be sure to subscribe to the channel so you don't miss that video. But go ahead and let me know what your thoughts are on Domino's stock in the comments below. If you'd like to be able to download this stock valuation spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.